Hey there, Tracy Cotton from Morrow Insurance Agency, and today is the second video in the series on small businesses because this is Small Business Week. And to celebrate Small Business Week, I thought that it would be maybe a way for me to give back to do a series of videos on things that I knew that small business owners end up having to deal with when it comes to insurance. And today's topic is about why is your insurance more than the next guy's? I think that that's something that a lot of times when you get a couple of store owners or you get some different businesses together, they start talking about their insurance and they'll find out that they may be paying very different amounts. And they're wondering, well, why would that be? Especially for some of those who might be in similar businesses. An example that I thought that I might use is if you're a coffee shop selling donuts versus a donut shop selling coffee, it's like a whole different thing. And the reason why is if a coffee shop is actually only making the coffee there, but somebody else delivers donuts to them to sell, then they're literally the only product that they are creating is the coffee itself. And when I say creating the product, it's still a matter of just steeping the coffee, adding some espresso, well, not adding some espresso, making some espresso, adding some whipped topping, maybe that's just me. But the only thing that they actually are really doing is creating the coffee, where they actually take the beans and they go ahead and they brew them. They're not making the donuts. Somebody else is making the donuts. So the amount of equipment that they have is probably limited to a case where they keep the donuts, maybe a refrigerator where they keep the cream and the milk. Maybe they have, obviously, the coffee making equipment, as opposed to the donut shop that sells coffee. If they're actually making the donuts there, they have mixers, they have fryers, they have also got refrigeration equipment, but it may be heavier duty refrigeration equipment, depending on how much that they get that's refrigerated or frozen and how much they have to keep to have in stock. That could mean that they have a lot more property, but they also have more risk. And it's because from an insurance standpoint, they're going to look and see who's got the bigger risk. Does the coffee shop that's just making a coffee drink where they're taking roasted coffee and brewing it have as much liability issues, possibility of product liability, making somebody sick, hurting somebody, etc., or does the donut shop? And the donut shop actually does, because there's more ingredients involved. There is a obvious shelf life, and the things that are being put into that donut could be things that could bear possibly foodborne illness, as opposed to a little bit less of a risk of that in a coffee drink. Now, there's some differences there, obviously. I mean, you might both see things with milk or other things that you're thinking, well, those could all spoil. But as far as the actual price, the liability is going to typically cost more for a donut maker than it is for a coffee house that's actually just actually making the coffee for you when you show up. Third business that might be paying a different rate altogether could be the actual coffee roaster. The coffee roaster is still going to probably pay a little bit more for their liability portion of their insurance, again, than the actual coffee shop, because they are taking a coffee bean and they're processing it, they're labeling it, they're packaging it, and then they are selling it on to the consumer without having any more control over how it's sold, etc. So there could be some differences there as well, not to mention the fact that, again, they may have more expensive equipment, possibly even than the coffee shop does. If I have a coffee shop and I'm just a pour over, which some coffee shops are, I might just have nothing but an industrial strength coffee maker, not counting an espresso, not counting any kind of other frothing type of devices, or even blenders to make frappuccino type of things. So you can kind of see the differences that between these three types of businesses, where they all think, well, we're all kind of in the business of coffee and donuts. There could be a big difference in premium, hundreds of dollars difference, especially when you look at the liability side, or if you're really looking at the idea of the difference between the equipment that somebody might own between the different businesses as well. One of the other risks that you involve with a donut shop is actually over on the work comp side. When you've got workers that are dealing with hot coffee versus workers that are dealing with mixing ingredients, they're possibly dealing with knives or other sharp objects perhaps, as well as the idea that they are working with a fryer, and a fryer can have its own issues. There could be actually a more expensive rate for somebody with a work comp policy for their employees that are making donuts versus making coffee drinks at a coffee shop. I hope that that makes sense, and I hope that that actually maybe kind of gets you thinking, I need to talk to my insurance agent about what is it that I'm paying for, and do I have the right coverages for my business? Because if they don't know what it is you're doing for sure, they could even possibly have you improperly classified or not have you all the coverages that you need, such as spoilage, if you have items that could spoil, as well as other types of things. So definitely give your insurance agent a call. You know from looking at my information that you can always give me a call. I'll be happy to answer your questions. I thank you so much as a small business owner for tuning in, and I hope that you will share the message. And I look forward to seeing y'all again later on this week with other videos dealing with insurance and how it pertains to small businesses. Thanks.